Welcome back to Trading Wars. Thanks for joining me today. I have a very special video. A lot of people have been asking me about Fibonacci, how to use them, how to draw them. So I'm going to be breaking that all down, and I'm going to be sharing with you some of my secrets on Fibonacci. All right. So if you're ready, let's step into the war zone. All right, guys. So I want to talk about coming into the week and understanding where the Fibonacci's are, how to use them, how to make good money trading them. Okay. So let's get rid of this chart. Okay. Let's get rid of all of this and let's start from the beginning. So coming into the week, the market actually opened here on Sunday. Okay. So overnight we pushed and we made a higher high, and then we started taking out these swing lows. Okay. So as we start taking out these swing lows, we have a reference point. So this is going to be our anchor. This is going to be our higher high. Okay. So now what we want to do is we want to use this as our pivot, and then we need to find a low. So if we look to the left, we can see that we had three major swing lows. We had this one, and this one. And we can see that by the long wicks, which represent buying power. And that's how you determine your swing lows. You look for major pivots, hammers like this, for example, big wicks. Those show algorithm buying, okay? And the reason why Fibonacci works so well is because it's trying to understand where the robots are, where their orders at, okay? So what we're gonna do here is we're gonna use this swing low right here, and we're gonna draw from low to high. And the reason why I use that swing low is because when I went down to a lower time frame, like I'm going to show you, I saw the algorithms were purchasing using these Fibonacci levels, and you can see it most evident actually at the 618 right here. You could see that it actually touched it to the wick, and then we popped up. So that gave me confidence that this is my anchor. This one, we already knew that the high, there's no judgment here. This is the highest point. But determining your anchor, sometimes you need to go to a lower time frame and actually see what's happening with the robots. So let's go to a 5-minute chart, okay? And then let's look at these levels and let's talk about how you can trade them. So here is our swing low, here is our swing high, okay? So if we go to the 50, the 50% retracement, we can see that we had a big push up. And when we came to the 618, we had also an inside bar with an amazing push up as well. Okay. And then later on, when we touch a 786, look at this double bottom, beautiful, boom, boom, gone. Right. So one of the strategies is waiting for the price action confirmation at the Fibonacci levels to get in. Right. And what did we have at the 618? We had an inside bar. What did we have at the 786? We had a double bottom and with an inside bar. And what did we had at the 50 is we had this big engulfing bar. So you can see at the Fibonacci levels, we're getting reactions, and that gives us confidence that the algorithms are dominating the market. So what we're going to do here is we can take any of these candlesticks and we can just scalp. We can scalp on the way up. We take a few points, take some profits, put our stop loss to break even, and just keep doing that at these levels. And they're very, very, very accurate. So that's how you could use these levels, come in using candlesticks and really hit them for good money. And as long as you're trailing your stop, taking targets on the way up, you're going to make a lot. All right. So now let's go back to the hourly chart. Okay. So the secret that I want to tell you guys about is, okay, we have this long leg, right? Here, pull back, and we have all these Fibonacci levels. Okay. But what about the short leg? This is what a lot of people don't talk about. This is why, in my book is sold over 110 copies now. The reason why is because I've been trading Fibonacci's for a long time, and I'm telling you guys the truth. So what about the opposing? Okay, people don't look at the opposing. Okay, we had a push up, but we had a push down. You guys see this push down? Here, let me draw it for you guys. So we had this push down, a very powerful push down as well. So why don't we get rid of this and let's draw the Fibonacci from the high to the low of the push down like that. Okay. What do we see here? We see a beautiful rejection at the 618. Absolutely beautiful. And now if we go to a lower time frame, let's go to the 15-minute chart for this one. Right at the 618, what do we have? We had a doji, and then we had an inside bar, and then we broke down and we just kept going down in legs. And if we draw the Fibonacci for these small legs, you can see we're getting rejections at the Fibonacci's on the way down as well. So what's happening on the hourly chart is also happening on the 15 and 5-minute chart. Look here, rejection on the 50, we continue down. So this is why it's so important, guys, that you have a great understanding of Fibonacci. You must have a good understanding of Fibonacci if you're going to trade in the market, because the market is dominated by robots. So if you can't beat them, you got to join them. And one way is reading the Fibonacci and using that to your advantage. And now this is the secret that people don't talk about that I want to share with you guys, okay? So when this Fibonacci leg is completed, where is it going to complete? Okay, so let me just make sure this anchor is right. Where is this leg going to complete? So we have this push down, we have this pull back to the 618. Where are we going to complete? Well, for you guys that watch my reversal video, you know the 272 is a major extension where the algorithms dump their position. Because if you got in here, this is what we call a measured move target. So imagine how much money the algorithms made there. It's crazy. It's crazy how much money they made there. Okay, so what we can do as traders is we can front run, right? We can come in 1 or 2 points above this 272 with a limit order, right? And we can put our stop either below the 382 or the 50, right? So this is one of the secrets that you know, that not a lot of people talk about. So I'm sharing it with you guys here today, and that's easily. Let's see how much points we could have gotten here. Let me get the tool out here. Sorry, guys. So that's easily, you know, where's the ruler? Let's see. Probably about 10 or 20 points. Sorry, guys. Just getting there. Let's do that together. Okay. So at the high, 37 points. But this could be the low for the next few weeks or for the next month or the next few months or for the rest of 2021. Okay. So if this is the low and you're in this, you scale out some, you put your stop loss to break even now, you're hanging out, you have a risk-free trade. And what if this thing gets back up to 4,000? How much money are you going to make? How rich are you going to be? All right. This is how we use Fibonacci in our trades to give us better anchor points, better support and resistance, better areas of reversal, because we think like a robot and we outsmart them. All right. And all of these topics, guys, are in my book in great detail. I have over 75 pages worth of knowledge in there. So it's $75 if anyone's interested on my book. It has a lot more detail because I can't talk about every single thing in one video, but you know, I also do have my free Fibonacci playlist. So please check that out if you're interested in hearing more. Okay. And the last thing I want to talk about is DraftKings, because Fibonacci goes both ways, right? It goes from the long direction, but also the short direction. So I just wanted to point out to you guys, I've been doing some analysis on DraftKings, and let's just look at how the Fibonacci legs are playing out, okay? So we obviously can see this big push down, okay? Anytime we have a big push down, we want to take the Fibonacci from the high to the low, okay? And look at this, okay? Do you guys see this? This is, let me just pause for a second. Right here. Do you see how we touched the 786 once and then we hit, boom, drop? And the reason why is because there's robots that are trading these stocks. It's not me and you that are moving the market, guys. Okay, if people don't think like that, it's robots. Only an algorithm can be there sitting, waiting with that much shares. Okay, so look how beautiful this is. This is why we must use Fibonacci. So all you got to do, guys, is you have your alerts on your levels. And when it hits your levels, you can either short the stock or you can just buy puts. Okay, and just get your puts, load up on your puts, and just go for good risk to reward. Right. So now, okay, we trade to the 786. Right. We come down. We reverse where? Right on the 382. Right. This is why this area here, that's why I say come in at the 272, stop below the 50, because I've tested this. I've done the work. All right. I already done the work for you guys. All right. Now look over here. We have inside bar, boom, reversal, pop. Beautiful. So you can play it both ways if you understand the Fibonacci. Okay. And then what's next? Let's draw the next one. Now we have another leg, right? Now this is the high. This is the low. Look at that. Right. So the algos front run a little bit sometimes, right? They front run here. Boom, 618. Inside bar again, bam, another drop down. And then look where this leg completes, right on the 382. Okay. So if that doesn't prove that algorithms are running this market, I don't know what else can, because the precision is so insane. So please, please use Fibonacci in your trading and help use the tool to make better trading decisions. Okay. For more resources, I have a whole playlist on Fibonacci. If you want to support me and you like videos like this that I'm doing and you want me to continue to make these, consider supporting me, follow me on Twitter, and buy a copy of my book. Okay, guys? Because I put a lot of effort into that. I put months into that. All right. Thank you very much. Enjoy the rest of your day.